Attendees are in listen-only mode.
Good afternoon, everybody. Stan here from theartofchart.net, and I'm doing a webinar today. Jack is on holiday until next week, and the webinar today is on Elliott Wave. We're going to talk about patterns using Elliott Wave, support and resistance, and a whole lot about Fibonacci. So that's the target, or that's the target conversation I'm looking to have. So what I'd like you to do while I'm doing a quick intro here is, if you could please, whatever your interest is in learning about Elliott, okay, and how it's useful, okay, because Elliott by itself, on its own, in my opinion, is not useful. You have to actually combine it with some other things, okay? It's a very, I use it to give me perspective, okay, and I'll show you how I do that. But if you have specific questions, please put them into the questions tab, and I will get to them. I'll let the questions drive the webinar. One thing I want to point out that is new and different on theartofchart.net, and I want to point this out. Where is it? Here it is. We are offering now a 14-day free trial, okay? So if you haven't ever seen our stuff that is subscriber-based, this is your chance to get it for free for 14 days, okay? So what does that come with? We have three different services. We have a charts package, okay, which are charts only, and that's done twice a week, okay? That's done for 12 of the most commonly traded futures instruments. We do also a daily video. Every single trading day, we do a daily video across those 12 trading instruments. Also, along with that, we will give you in this 14-day free trial a subscription to our Twitter feed, which provides real-time updates or daily updates on what we have posted. And also, Jack provides bonus charts every morning. So in other words, you get the daily video at night with the synopsis of what's in store for tomorrow. You get the bonus charts in the morning, and also the live Twitter feed, and then with that we also have a trader education library which has well over 23 hours worth of trading videos like this one. So if you want to give us a trial, this is a great offer, so keep that in mind. Now that the commercial is over, let's just do a quick disclaimer. This is being done for educational purposes only. That's what we do here on The Art of Chart. We do not issue trading signals. I'm going to be talking through charts. I'll be talking through technical analysis of charts, talking about what's happening right now in the S&Ps, and I will be telling you what our current targets are, but I'm not making any trading recommendations as I do this. So just want to make that clear. So I'm going to work on the Dow Jones Industrials and kind of walk you through some pointers on Elliott. Okay, that's the purpose of the webinar. Any questions you have, key them in, and I will get to them. Let me start with something very, very basic, first of all. I'm going to do a comparison of how I do Elliott versus how people traditionally think about Elliott. Okay, I'm going to do two different charts, and I have them both here. This is the traditional Elliott. Okay, and I will show you the Fibonacci sequences as well for the traditional one. And so you know, in a traditional structure, there's a larger degree 1 and 2. Then you have a smaller degree 1, 2, 3, 4, 5 for your third wave, which is the big impulsive wave, a 4, and then a 5. Okay, now this big impulsive wave doesn't occur very often, in my opinion, especially in commodities. So, and I am principally a commodities trader. I trade indexes too, but I trade commodities a lot. Okay, so I have moved to this modified impulse wave, which is a 3-wave structure. So it's 3 waves up, 3 waves down, 3 waves up, 3 waves down, 3 waves up. Now, while this may look like a very simple reorganization of the traditional, and that's really what it is, there's some differences, and I want to point them out to you by looking at, is it this chart? Yes, it's this chart. Okay, so you see in front of you the black traditional count. Okay, however, the blue count is what I would call the modified count, which is what I use. And here's something about, and by the way, the traditional count works, but you have to be very talented at it, and you really have to think about it. Okay, the way you would count this is typically 1, 2, 1, 2, 1, 2. Okay, and then 3, 4, 3, 4, 3, 4, and then you have a 5th wave that terminates early. Okay, now the way that I look at the reorganized version of Elliott, there is no such thing as a terminated 5th wave. And for years and years and years and years and years, I did the traditional, okay? And the fifth wave was always the, oh, it could terminate early, oh, this could happen, oh, that could happen, and then sometimes even the 1, 2, 1, 2, 1, 2, I would say, well, actually this is a 3, and then make a mistake, and then this was the 3, etc. So in my opinion, the traditional one, in a if you're looking at weekly, daily, hourly, 4-hour charts, you're doing a traditional count, it takes time. It takes a lot of time, okay? I think the 3-wave version is easier, okay? So 3-wave version is ABC for a 1 or a W. Here's your 2, an ABC for your 3, and then your 4. And by the way, notice the back test may or may not be in 3, okay? And then an ABC for your 5th wave, okay? And you're done. No early terminated 5th. So I prefer that because I do so many charts every single day, okay? Commodities and indexes and bonds and currencies that I prefer the 3-wave because it doesn't require as much in-depth thinking, okay? It's actually more straightforward. So that's why I do it that way. I'm introducing it to you so when I go to a real chart, you can see how I apply it. Okay, so that's it. I'm going to go into, at this point, a little introduction into using Elliott here on the Dow Jones. Okay, I'm going to start down here at this potential 4th wave. So questions at this point? I don't see any questions, so I'm going to continue. Okay, so let me just show you where we're at. Okay, so Fibonacci sequences. Let's first talk about that. Okay. Let me talk about Fibonacci extensions. Now, if you're not familiar with Fibonacci extensions, here's how they work. I'm just going to do a quick Fibonacci here, okay? What I have on my setup for Fibonacci's is I have the 0.618, the 100% fib, the 1.236, the 1.618, and the 2.618, okay? So I'm going to go over those again, the 618, the 100, the 1.236, the 1.618 and the 2.618. Now, these are used differently in impulses, okay? And I'm giving you all the metrics because we're going to use all of them here over the next, 20, 30 minutes or so, okay? So what I'm looking for, first of all, is a 3-wave move, okay? So here we are, and we have a potential turn. I'm looking for a 3-wave move. You can see it pretty easily, right? So here it is. Okay, you have an A, a B, and a C, and what do you get? Let me just clean this up so you can see it clearly. Okay, and this is again very straightforward. It may seem overly simplistic, guys, but you know what? Traders make trading hard. It doesn't have to be hard. Okay, here's the 100% fib. Did we hit it exactly? No, we did not. Okay, do you ever hit the 100% fib exactly? No, there's a little bit of a range here that you can go either under or over. Okay, so you could also look at this as a 1, 2, 3, 4, and a 5. You could look at it in a traditional sense, but look at the 5. The 5 really is not very much of a 5. So for me, for swing trading purposes, there's your W. Okay, 3 waves up. Okay, an ABC to 100% fib, there's a W, okay? Now, look at the downside move. What is that? It's a 3-wave move, okay? And all I do is, again, with extensions, I look at 3-wave moves. An A, B, look where it went to, right to, I'll clean this up again so you can see it, right to the 100% fib, okay? Now, is that a double bottom from a classical perspective? Sure it is, okay? And is that something that you would want to take a shot at and trade long with a stop below the previous low? Absolutely you would. And what you want to try to catch in the Elliott, sort of mindset, if you will, is first of all, first waves are very difficult to trade, okay? They're very choppy, very bumpy, they're very difficult to interpret, and very often, as you can see here, there is very little to no divergence. Okay, very little to no divergence. Okay, so, typically your 3rd wave or your Y wave is where you make your money. Okay, so you're looking for this setup. Okay, so here's the setup: 3 up, 3 down. Okay, looking for a 5 up. We got the 5 up. 1, 2, 3, 4, 5, and there is a Y. Okay, so, and again, let's look at this from a Fibonacci perspective. Okay, so you look at a larger degree movement like this, an A, B. okay, or WX, you're looking at, first of all, the 100% fib, you would expect to see some resistance and a pullback. 50% pullback, what do you get? You get an impulse, at least to the 618, and this one extended, okay, all the way up here. You can even break down the smaller degree process like this, and I'm just going to show you this real quick. There's an A or a W, a B, a C to the 100%, or the 1.236. So your three-wave session goes either 100 or 1.236. You get a pullback, you get another three-wave move up. Where does this go to? To the 1.618, okay? So from the 1.618, you would expect a pullback, and we got a three-wave pullback to where? The 100% fib. I have the fib drawn here. It's just an ABC down, okay? Now, we had a movement up, and then we had a flat. This is an ABC flat, and let me just show you that in a picture, because I think a picture is worth 1,000 words. These are flats, okay? You either have the origin, and you have a three-wave move down, three-wave move up, and then a 5, okay? The 5 is typically strongly impulsive, strongly impulsive. You can clearly see it on a chart, okay? And you can pick up what a flat is very easily. But a flat is a reversal structure, okay? Here is an example where the origin is an A, and then the B is higher than the origin, and then you have a 5 down, okay? So either one of those is a flat, and that's what we have here. 3 down, 100% fib, 3 up to the 100% fib. I could draw the 100% fib. I'm not going to do it for you right now. But then we have a flat, and a flat typically goes to, and this is a key setup, by the way, okay? So your A, B, C typically goes to the 100% fib right here, and sometimes it extends lower to the 1.618, okay? Now, just showing you this here is another example of how Fibonacci's work with Elliott. Okay, there's an A, B, and it goes to the 1.618. Okay, so what I just showed you is on 2 different degrees how Fibonacci's overlap. Okay, let me just clean this up so we can see it clearly. So, you know, we have a 1.618 here in this structure, an A, B. There's your C wave, unmistakably a C wave. Okay, look at the impulsive nature of it, right? And we also have an A, B, C down to a 100% fib, and they overlap. So, you know, if you're going to do fib work with Elliott, one thing you have to look for, number one, are patterns like this. You see an A, you see a B, you see some resistance. You're looking for the C, and sometimes the C's are in flats, but even this is simply a 3 down with an A, B, 1, 2, 3, 4, 5 flat, okay? You get overlapping Fibonacci's. You get overlapping Fibonacci's, it's a gift, okay? It's a gift, and it's worth marking on your charts, and so I don't keep these marked on my charts because then I would have spaghetti, okay? And spaghetti you can't really see very well in terms of what's happening on the charts with spaghetti. So, that's basically the basics of Fibonacci's and patterns. And I don't want to go on speaking forever, but I'm just trying to demonstrate 3 up, 3 down. You draw your fibs, okay? You look at potential resistance areas. There's 100%, there's 1.618, and there's 2.618, okay? You break it down into smaller waves, okay? Here's an ABC up for 100% fib or to the 1.236, okay? So every 3-wave move I make, and let's take a look at the current action, okay? So here's a three-wave move, okay? Here's an A, here's a B, and there's the C right to the 100% fib, 18,652. Now, that is what we called when we broke this trend line. When we broke the high at W, we said, okay, 18,652, and we haven't quite hit it yet. We're awfully close, okay? We're expecting that now, but this could extend higher up to 18,874. So I'm expecting price to come in between the 100% fib and the 1.236. Now, is this something you can use day trading? Absolutely. On a 3-minute chart, you're going to get a narrower range than you are on a 4-hour chart. Okay, 4-hour charts, that's for swing trading purposes. So, you know, for me, 18,652, that's a good area to get short. If I'm going to put something on here or slightly above this high, will I add higher? Yeah, I would do one more add higher. I'd get in half size here, put another half on higher. That works, okay? Now, what you have to combine with Elliott to have any sense made out of it. So first of all, what I've tried to cover is the basics of the Elliott three-wave version of Elliott. Okay, so 3 waves, that's what I look for. I look for 100% to 100 to 1.236 for a impulse. Okay. Sometimes you go to the 1.618, like for example in flats you do, and very often in a structure, I'll show you the S&Ps where you go to the 2.618. Okay, so there's some judgment required around fibs, okay, but really what this is just trying to give you support and resistance. Where is there exhaustion in the market? Now, on top of this, what do you have to add? You have to have other trend indicators that help you get a sense of where there's exhaustion in a move, okay? Like for example, okay, let's look at this Y wave right here. How do I know that this is a Y? Well, because look at where RSI is. RSI is at an extremely high level, and there's very little to no divergence here. There's a little divergence here just in this little, little area up here, a couple of bars, right? That's okay in terms of having a back test, okay? But what this tells me is when we're at an RSI level this high in a count, okay? And that's, if I do the WX here, let me just remind myself as to what this is. Was this a 1.618? I think it was pretty close. Yeah, this is the 2.336. You can see how often it's there versus the 1.618, okay? So in a traditional sense, this would be the 3, this would be the 4, this would be the 5. That's what you would do in a traditional sense. In the way that I'm counting it, and this is just how I do it because of, how I like to do it. And by the way, I just want to say this, it's very important that you guys find something that works for you, okay? Every trader's different, everybody has a different style. This is just mine, it works for me, okay? And it may not work for you, and if it doesn't, well, find something else that does, okay? But for me, here we are at the Y. Here we are at a very high RSI reading, and what I expect in a 5-wave sequence is I expect negative divergence, okay? That's what this is. This is negative divergence with a lower RSI reading. So, this yellow box here is something that we marked for our subscribers. Once we had this back test here, we said 3 waves up into this area, and here is the divergence, okay? So that's a significant sign that we're at an end of impulse, okay? And that's what I look for. And I'll show you that around the market in some other places too. But where we are in this count right now is WX, YX. I'm looking at this being the end of a significant wave, and then I'm looking for a back test here. So this is a WXY, a 3-wave move to the 100% fib. This is an X. I'm looking for one last leg higher to finish the sequence, okay? And so, and if you look at the S&Ps, we have a different sort of structure going on, but, in trading, what I try to do is I try to look at Fibonacci's, I try to look at structure, I try to look at time, and then, of course, I look at price action, okay? So I'm looking at structure, time, and price action. Those 3 things in terms of trying to identify, the boxes, the yellow boxes, where there is resistance, where there is support, etc. So that's kind of the method, and it's pretty straightforward. So what I'm looking for here and how I arrived at this area, again, here's a 3 up, okay, to this 100% fib, expecting resistance. We've gotten it. I think we go maybe marginally higher here and then a back test. Back tests are not something I've spoken about, but what I typically look for in a back test is this. Back test 50% or so and then higher. Might it come in shallower at the 382? Sure, it might, okay? And that's fine, but I'm looking typically for a 50% back test. The way I tend to look at this, and this is very simple again. Let me go back to the drawing because you'll see it immediately, okay? An ABC with a pullback into the previous degree AB, okay? And that's very, very common. It happens a lot, okay? So, if you look at the market here in terms of the pullback, this pullback here, I'm expecting it to go into the previous degree WX right into here. Okay. By the way, there is a floor ceiling here. If you look, okay, if I look here, here's a potential, well, that's not quite it. Yeah, that's pretty close. You can see the blue line there, potential floor ceiling, okay, right here between the B and the W and this other high here. So where there's resistance, 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 typically you're going to find support, okay? So here's a gap, by the way. We jumped over the resistance, if you will, made this impulse, right? makes sense we're going to come back to the gap and maybe do a fill and then go higher. So again, with Elliott, you have to do some other trading techniques to make sure that it makes sense, right? Okay, so on the Dow, by the way, WXYX, I'm looking for this last little wave up with divergence, okay? So again, 5-wave sequence, last leg up, we should go up on air. I'm looking at the new 52-week highs. We made this high here with like 251 new 52-week highs, okay? So we're not making 400 new 52-week highs. As a matter of fact, I think over 25% of the market right now, or 23% of the market right now, is 20% or more from its 52-week high, okay? So in a market that's making all-time highs, that's not a very positive sign. That's not a bullish indicator, okay? Can we still go up on air? Sure we can, but in my mind, we're at the end of an impulse here, very close, WXYX. Last leg up, we're not finished yet. Looking for this divergence wave again, like we saw here, 1, 2, 3, 4, 5 up for the A. Here's the divergence wave, looking for that. That's a key part of Elliott and using Fibonacci's to look at, where are there potential areas for turns, okay? So, and then the 50 back and then higher prices, okay? So that's kind of the introduction to Elliott. I'm going to go to the S&P chart and kind of walk through that. We have a little bit different structure here, okay? And what I want to try to do here is show you, for example, this WXYXZ, which, by the way, could be done here, okay, potentially, okay, because it's a 5-wave sequence. And let me kind of show you the 5-wave sequence. It's I'm sorry, let me just redo that. Here's the W, the X, okay, and here's the 2.618, and very often the end of structure happens at that level. 2181 is my number, okay? So we have a WX. Here's a Y that either finished here or finished here, and I'm looking for the X and the Z. Now, did it finish here at this is roughly 76s? Did it finish there? Maybe it did. It could have, okay? But what tells me that it did not is this structure, okay? This structure, let me just delete this. What tells me that we haven't finished to the upside is this structure. This is a triangle. You can see it pretty clearly here. I'll show it to you on the E-mini. A triangle typically in an Elliott wave sort of mentality, it happens with a compression of RSI. I see a lot of folks identify triangles, but they don't identify triangles with a compression in RSI. Without the compression, you don't have a triangle, in my opinion, okay? So triangles compress and then they thrust, and what begets the thrust is the compression in RSI, okay? So we clearly have a triangle here. We clearly have compression. And by the way, I have not introduced the whole concept of an RSI price cycle, okay? So with Elliott, what I do, so here's your Y wave, right? The Y wave has no divergence. That's not unusual. What I'm looking for is a pullback and divergence on this last move higher, okay? So again, WXYX, here's your large degree Y, here's your X. Actually, it's over here, okay, because of the triangle. Last leg up, okay? Looking for this last leg up before I look for a pullback, okay? Now, the RSI price cycle is this line here that I'm about to move around. Okay, so with RSI, what I'm watching is the ascension of RSI. Typically, your W is here, okay, and it's pointy. There's no divergence typically on a W wave. Okay, you can see 5 waves in this: 1, 2, 3, 4. There's not much of a 4 here, and a 5. Pretty much a straight impulse up. Okay, and this was because of the vote in Great Britain, right? So we had the limit down day, and then we had this huge impulse up. Okay, so there's your W. Okay, 3 waves down for the X, right? The X is nothing but a connector wave. Where does it stop? At the monthly pivot. Okay, the blue line on my chart is the monthly pivot. That's fairly traditional, by the way. And by the way, where we had previous resistance, you can't really see it here, but there's previous resistance right here, only for a couple of bars, and then another impulse up. So that's not uncommon for it to go to a previous degree wave X, if you will. So, here we go. First wave up on RSI. Here's your pullback for your wave X. You draw a line, okay? If you stay above that line, price marches higher. That's all it does. It's a very simple technique. And what am I looking for? I'm looking for a higher high in RSI Right here it is. You could call that the smaller degree Y if you want. And here it is again. So it's a judgment call whether you put the Y here or put the Y here. But bottom line is the high in RSI is your Y, okay? The pullback, okay, and you expect divergence, okay, which we got right there for the black Y, okay, because that's a 5-wave structure, WXYXC. And so what I'm trying to show you here, and I'll make it more explicit because I'm going to draw a new line. Here is your divergence right there, okay? And so that's your divergence on your black Y, okay? So it's not hard when you get used to looking at things when you get used to looking at structure, it's not hard to tell where there's going to be a significant turn. This is a sign that there's a significant turn happening. Now, what I want to say about this is this. Do we correct in time or do we correct in price? Okay? A price correction, given this structure, I would expect if we were correcting in price, okay, would come back at least 50% back into the golden ratio zone, okay? We should have made 2140, okay, from this level. Did we make 2140? No, because the market doesn't always correct in time. Sometimes it corrects in price. This is a correction in price. It's a sideways triangle. What is that? Compression. What do we expect out of a triangle? A terminating move, okay? So what's coming on the S&Ps is a terminating move, okay? So I'm expecting a higher high, terminating move, this to end, and then we're going to get a back test. And how is that determined? Basically using trend lines, using RSI, using some basics around Fibonacci's and looking at structure, and just having some savvy around a chart. I'm not trying to say this is magic. It's not. It's actually quite simple. Let's look at that triangle maybe, and by the way, RSI price cycle here, okay, well, a triangle price cycle, if you will. It's not really a price cycle. A price cycle tends to go from a buy signal like this divergence here. It tends to go from there all the way back up to the top of the RSI range, okay? So that's an RSI price cycle. This is nothing more than a compression triangle. But what I tend to watch for is I tend to watch for breaks. When I see a break of RSI right here, for example, okay, that means the Y wave is over. Okay, this is a sign that the Y is over. Okay, so I know that I should be exiting my longs. Okay, a pullback, divergence, that's the top of the black Y. Okay, triangle, what am I expecting? The X to be here and a thrust. Okay, so looking for higher prices, 81s, we could see 91s. Okay, 91 is actually the A, B, C, the 100% fib of the black W and X. So, you know, that's that's my basic overview, looking at current charts, looking at the basics of structure. On one chart here on the Dow, I showed you, not that Dow chart, this Dow chart. I showed you basically what a flat looks like, okay, a reversal structure. By the way, this is a simple 3-back, an A, B, C, D, I'm sorry, this is a 1, 2, 3, 4, 5 pullback. It should be in 7, actually. I can't really see it very well, but 1, 2, 3, 4, 5. This is some form of a 3-back in some way. I have to really take it apart to see it more clearly. But, you know, given where the S&P is, and we could have a marginal leg lower, it's quite possible here we could continue sideways in this triangle. But if you look at this triangle, okay, we are about to break higher. I mean, we are so close to breaking higher. We actually finished the high of the day today at triangle resistance, okay? So I would expect this. I'm expecting this to find support at the weekly pivot, which, by the way, on the E-mini is 63s, and then I'm expecting it to go higher. So we'll see how that plays. But the next leg up should find divergence, okay, which would be your Y wave, your larger degree Y wave of the larger structure, which if I scrunch this in a little bit, okay, here's your W, here's your X. This is your Y, looking for the X, and then the Z, okay? So that's basically an overview of Elliott and how to look at potential support and resistance. Again, 3-wave moves, 100% fibs, 2191 is the number. Then breaking it down into smaller waves, WXYXZ, the 2.618 is at 2181. Okay, that's kind of how I do it, guys. So what I'm going to do here is see what questions you have at this point, because that's the basic overview of using this way of counting and looking at structure. And again, the pullback here, and I haven't really talked much about retracements, but you know, if we hit the full target at 91s, okay, the retracement should come back at least 50% to 2090. Okay, there is a floor ceiling area here in the blue line, which comes in roughly at 2110. Okay, but 2090 would be what I would expect, and what I layer on top of my work typically are low windows. So right here is a low window, which ends, by the way, roughly speaking, on the 8th of August. Okay, so this is a high window here. So we knew that price would march higher up into the high window. So again, Elliott is integrated with a time-based technique. It's also integrated with structure-based techniques looking for patterns. I think that as a trader, what you have to do is you have to integrate multiple techniques in order for you to be able to have different perspectives on the market and where it is, okay? So that's basically the overview and how I use Elliott. Let's see if there are questions. I've given you about 20 to 25 minutes of just straight talk, okay? So what questions do you have about Elliott and how it's used? Anything about Fibonacci's? Happy to answer questions about Fibonacci's as well, or anything about patterns. Happy to answer questions about that. So what's on your mind? Okay, in non-traditional Elliott wave, how do you know if a structure will have 5 or 3 waves? Okay, the way I do that, and this is, I'd have to find a really good example to show you. And first of all, I don't know. Okay, and I have to be honest with you, this impulse here is a traditional structure, okay, the WXYXZ stopping at the 2.618, that is a traditional structure, okay. You don't see these very often. They do happen, so you have to be flexible and you have to look for you have to look for it. So first of all, I'm looking for larger degree 3-wave moves, okay. When I get to a smaller scale, okay, like for example, the black scale, I'm always looking for 3-wave moves, okay. So this W, X, Y here is a 3-wave move, okay. This is a 3-wave move also, but this is a 1.618 move, okay. So on the black degree, I'm always looking for 3, okay. Here's a black degree, W, X, Y, 100% fib is here, okay. However, the smaller degree can be in 3 or 5, and you really don't know, okay. So for example, here I am with an A, B, and I'm looking for a flat. Now, why am I looking for a flat? Because I believe that this is an impulsive structure. Here's your W. Here's your first sequence down, 3 waves down for 100% fib, right? Here's your back test, okay? We go lower in 3. We go 3 up, 3 down. What am I thinking? I'm thinking it's a flat. So I'm expecting a 5 up. I'm expecting a WXYXZ, okay? And I believe this measures 2 traditionally, if I'm not mistaken. So let me just kind of do this one quick. Yeah, this measures traditionally pretty well. So, you know, here's a flat, an A, B, and I'm looking for 5. So here's your WX. Here's your Y right at the 1.618. And here's your X. This is a little flat even. Look at the C wave right there, which is even a lower degree. And then the final wave up, which doesn't always make it to the 2.618. That might even equal 5 equal 1. If you look at the 5 equal 1 measurement of W, that could very well be that. So you don't know, but you try to discern basically what you're seeing in terms of structure, whether to expect 3 or 5. Now, sometimes you expect 3, like for example, okay, let's just look at this for a moment. Let's just say I'm looking for 3, and I was looking for 3 here. Let me get rid of this. Let me just show you if I'm expecting 3. Here's an A, B, C, and what was I expecting here? Okay, and by the way, this is high, but there's no trading technique that's 100%, okay? And I accept that there are going to be problems and errors in the way that I trade, and I manage risk appropriately, right? So I'm looking for resistance right here, Okay, and there's the yellow box to prove that that's what I was looking for. Okay, and what happened is we broke the 1.236. So what you probably can't see there very clearly is that I have both the 100% fib and the 1.236. If we break the 1.236, I'm immediately looking for a non-traditional structure. Okay, so 3 waves up, I would have expected a back test into the gap. I'm sure that's probably what I was saying at this point in time, because that's how I think. So 3 waves up into this area, 50% back, gap fill, and then higher was probably what I was saying on my daily video, and it went directly higher, no pullback. There were a couple of occasions where I was saying, hey, pull back here. It never happened. So that's when you know you're in a traditional structure, when you're wrong. Okay, so, and I'm right more often than I'm wrong, I have to be honest. So this is not something that you're going to see often. Okay, again, the 2.618 up here at 81s, clearly a traditional structure, clearly a target in my opinion. And I'm putting it back on my chart so I still have it for tonight's video. But so Sebastian, that's my answer to your question. You don't know for sure. You don't know anything for sure trading. So you look at the possibility, of course, that it could turn here. You put on a short. You put a reasonable stop. You get stopped out. You look for your next trade. Your next trade would have been this back test here, which was a potential long. Okay, so that's my answer to the question. Do we have other questions on Elliott or anything related to Fibonacci's? Okay. Does your target in SPX, will it change with new pivots that we will get in the next month? It changes every week based on pivots. Okay, so well, first of all, the Fibonacci's don't change. Okay, I'd be very surprised if we exceed 2191 without a back test. Okay, I'm expecting a back test in 2 areas. There's a floor ceiling here, which is a very important floor ceiling. We've had multiple runs at this, and we have proven resistance here. That would be a very natural support area. We also have this gap here, very natural support area. And of course, we have the monthly pivot down here, which is notorious for turns. So, so we have really 2 target areas here. But, from where I sit, the pivots will help you determine where the eyeballs will be looking at the chart. Okay. So I can show you other chart examples like oil. Every time we've hit the weekly pivot in the last couple of weeks, we've had a significant downside move. So pivots, the only reason I use pivots isn't because they're magic or anything like that. It's because there are lots of eyes watching pivots. Okay, so right here is the monthly pivot. This is going to change in a couple of days, and wherever it falls, which will probably be higher, I'll be watching that as a backtest area. Now, would I be surprised if the monthly pivot comes up here to this floor ceiling? That would really reinforce me big time in terms of this area being the target. I would probably raise my low window up to here. Okay, so that's what I do typically with pivots, is I use them, especially the monthly, as areas for significant swings. Okay, the other thing about pivots, just to say this, is they are magnets. Okay, so am I surprised that the weekly pivot here, the pink line, we've been all over it this week. Okay, we've been all over the weekly pivot. It's a magnet. Okay, and so very often you see us, if we impulse up into a pivot like the weekly, we'll reject off of it and then break through. Same thing on the monthly. But pivots are an area where you have hundreds and hundreds of thousands of eyes looking at pivots on commodities, on indexes, etc. So, people are making decisions at those, and it's good to have them on your chart, as well as Bollinger Bands, as well as, moving averages. Certain moving averages are very, very popular in terms of seeing support and resistance at it. So, I would put I would make my own judgments around pivots and how they work. Notice the ones that work, the ones that are consistent more than 60% of the time, and the ones that don't. Throw the ones away that don't, and the market does change over time, and that's just something to keep in mind. Okay. Okay, that's basically it for questions, I think. Do we have other questions on Fibonacci's? Do we have other questions on Elliott Wave? Okay. For treasuries, do you use the same fibs as in ES for extensions and retracements? Yes, and also for expansions, and that's something we should probably talk about Fibonacci-wise. A lot of people don't use expansions. I think they're extremely popular, or extremely useful, I should say. Let me go to bonds real quick, okay? And this is just me doing some real-time measurement today. Okay. Now, first of all, bonds. I use Elliott, as you can see here in bonds. Here's a three-wave move to 100% fib. Okay, we expected resistance there. Here's the back test. Okay, you can see the back test. Here's an example, Sebastian, where we had a 3 down that went 5 down. Okay. And a lot of traditional folks say, oh, there's no such thing as a 5 down. Well, I've seen 5 downs plenty of times. Okay, so I'm looking for a 3 down. What happens? We get a 5 down. So I missed the target, but it doesn't matter, because if you're looking to get in long, you start something, you get stopped out, maybe you put it on lower, and you know there's a turn in here somewhere, right? So, and again, this is roughly, if you look at the structure here, again, using retracements, I do the same thing everywhere. I try to do the same thing everywhere. I don't use the same Fibonacci's everywhere. Certain instruments require you to use different Fibonacci sequences, but bonds, they trade just like indexes. They're a very technical instrument. So here we are, the back test into the golden ratio zone, the 0.382 to 0.618. I usually give the 50% as the target, okay, and we came right down to the 50%, okay, and we impulsed higher, okay. So, and what was the target here? Okay, the target here was the 100% fib, okay, and did we hit that target? Well, not quite, okay, pretty darn close. We got to 77.11, I think, if I'm remembering right. Yeah, 77.11 versus 77.23. That's again a three-wave move. So I'm doing the same thing here that I do on indexes. And by the way, here's your high window. So I use cycles for timing. And I think placing price and time is important. By the way, look at RSI. There's your divergence, okay? We were looking at a possible short wave here at the 618, okay? And we were looking for the full Monty at the 177.23. Now, I want to say something about this. Sometimes what you do get in a last wave up is you get a 618 movement, okay? So I have 618 here as the last sequence up. This went to the extension. The extension is the 100% fib. So this is the full three-wave move for the fifth wave. Sometimes they come in short. I watch for both, okay? On the way down, we have a three-wave move into this area. What happened? It went 5 down, okay? Here's an example of it, okay? So I'll show you the fibs. Very simple. From the high, first of all, we're expecting this area. Why? Because it's a floor. Why? It was previous resistance right here. Okay, look at how many bars are printed there, right? So we came right down exactly to it and we bounced back 50%. So, you know, the measurement on the way down, there's your A, there's your B, there's your C. I'll clean it up for you. And let me just show this to you again. 3 waves, that's what you want to watch for. And again, between the 100% fib and the 1.236, okay? And we got the 100% fib here, okay? I'll move the box out of the way so you can see it. We got it here perfectly, right? But then we had a spike lower. Where did it go to? The 1.236, right? We are above the monthly pivot. What would you expect? 5 down? Well, I was looking for 3 down in a back test. We got a small surprise. We got, you know, another 30 ticks or so lower. We got the fifth wave, right? What am I looking for? A 3 back. Where are we right now? A 3 back, okay? There's a question here in my mind, by the way, and let me just go into the question. Is this a flat, okay? And by the way, as you get more and more experience at this, you need to ask yourself questions like, okay, this is a 3 up, or is this an A, B, and this is a 5-wave sequence up? Is this a flat, okay? So let me drop down to a lower level chart. You'll see what I'm talking about here. So is this an A, B, 1, 2? Is this a 3? Sure, it looks like a 3, doesn't it, right? Very impulsive. Is this the 4? And are we putting in a small, minor fifth wave higher? okay? Now, here's where an expansion comes in for those of you who are interested in learning more about Elliott and expansions. There's Fibonacci sequences in terms of retracements, right? I've shown you that. That's this gig here, and 50% back. Are we 50% back? Absolutely yes, okay? That's one way to look at where a structure might end, okay? So this back test, 50% back, that's my area to get short, right? There's another technique which is called a Fibonacci expansion, okay? I use it on fourth waves. So here we go with a fourth wave, okay? My first target on a fifth wave higher would be 173.27, which we almost hit today. The other way I would be looking at that fifth wave target, and I'm getting pretty picky in here, folks. Let me drop to a 15-minute chart. But again, Fibonacci's work on any time scale, okay? This is almost a 3 down. I would be using an extension to look higher in bonds, like this. A, B, it might go lower than that. C, we could go to 174.11, okay? So, you know, are we done going to the upside? Could the back test surprise us? Sure it could. And it's good to have eyes and different ways of looking at the market so we can understand what our risk is, okay? Do I believe that we're going lower in bonds? You bet. I really believe we're going to go lower in bonds. Now let me pop back out to a larger degree structure. Let's go back to a 60-minute structure. Let's go back to a 4-hour structure. We'll be able to see it all easier. Right? So this was a 5 down for a W. We're looking for a 3 back. This could be a flat. It could go marginally higher up to 174. Now, how do we trade in our trading system? Okay, this is what we do. We say you put something on up here, put your stop above the high, right? The previous swing here is where 50% back is. What do you do at 50% back? You take off a third, you put your stop to even. Okay, it bounces, you ride the next leg down, you take off your second third, okay? So right now I'm still short and I'm still holding a position from up here and I'm looking to add back. Now do I add back here on this marginal high? Yeah, I might add back even a little bit higher at 174. I haven't added back yet, okay? One of the reasons I haven't is look at the RSI price cycle, okay? By the way, look at the divergence here, I forgot to mention. So 5 down structures, okay, have divergence. There it is. Okay, divergence, that tells you right there to exit another third and you get long, okay, and you look for your either 3 waves back or it's an A, B, and a 5-wave structure that's impulsive, that scares the heck out of everybody usually, right? So if you're short and you see this impulse today, you're wondering, oh my God, I need to exit, right? It's a flat. A flat is a reversal structure. So I'm looking for a 4 and a 5, and then I'm looking for a reversal, and I'm looking for lower. Okay, so I'm still looking lower down into this low window. The other thing that helps me have confidence are timing cycles. So I know there's a low window in bonds coming in roughly between the 12th and the 1st. Okay, big window, but again, that's how cycles work. They're not precise, and you have to make your own interpretation. So could we see 174, 174.11? Absolutely yes. I'm looking to add another leg short, and I haven't done it yet, but I'm about to. So looking for that probably tomorrow at some point. Okay, next question. Okay, Bruce has a question. With this upper breakout where wave 1 equal 5, are we looking at 2350 wave 5 target? Bruce, are you talking about the S&Ps, I assume, yeah? Is this corresponding to your current structure and your opinion? Okay, let me go back to the S&Ps. Now we're talking about weekly type work, okay, looking at structure. And let me take you to, and first of all, what I would say is this. I don't see any support in the market to go that high. And that seems like a bridge too far to me. And by the way, I could be completely wrong, and I'm willing to be wrong, okay, on this count. But here's my suspicion at this point, Bruce. I want to just share with you what I see. And Bruce, can you just confirm for me? I think you're talking about the S&Ps, right? 2350? I'm going to assume that you're talking about the S&Ps. The first thing I do, Bruce, is I try to look at multiple structures. Okay, so I'm looking here at the Dow. Okay, and here is my sense of the Dow. Okay, and I could be wrong about this. Okay, but this is my current sense. Okay, so I'm looking at a 3-wave move here. okay, a WXY for an A, okay? I'm thinking this could be a contracting ending diagonal, perhaps, okay? I'm not sure about this yet, okay? But, you know, this is very strange that on this sequence here, we are having such low numbers on 52-week highs. I mean, we're having like 230 new 52-week highs, 310. We're talking very, very low numbers, okay? So when I see an expansion in the market to new 52-week highs, and I see not a lot of participation, it gets me wondering about what kind of structure are we really in, okay? Now, one way to see this, of course, is this is a fifth wave, okay, which is how I have it, WXYXZ. But if you look at a larger basis, okay, this could be a contracting ending diagonal. So 3 waves up for the A, 3 waves back for the B, 3 waves up for the C, if it's ended here, which it may have, who knows. I would look for a 3-wave down to the D, which would be shorter than A to B, okay? Then I'd look for a shorter wave higher, which would be shorter than the 3rd wave. So this could be a contracting ending diagonal, an A, B, C, D, E. That would make sense to me because of the low numbers we're seeing on 52-week highs. Okay. Also because of what we're seeing in China. Also because of what we're seeing in Europe. And by the way, I'm sure everybody knows how much unemployment is currently rising in the UK right now because of the vote that was done. I don't think look, if we were economically expanding and we were doing 450 new 52-week highs, 500 new 52-week highs, I would be bullish and I would be looking at this differently. I'd be looking at, Bruce, if you look at the weekly chart, like for example, what you're saying structurally makes sense, right? Okay, we look at the weekly S&P chart. Okay, let me look at the weekly. Yeah, so if you do the 5=1 measurement and okay, so here we are, I'm scrunching it in. Okay, here's your big impulse off the bottom. This is when the dollar was almost completely devalued. And you look at the number of ticks there, right? There's your 5=1 target, okay? 55 to 321 ticks, right? 55, 321, let's look at that here. 55, 321. So I'm getting a number up in the 2350 area. That's not exactly right, but that's, you know, close enough for government work. If I were looking at this mechanically, yes, Bruce, that would be a potential target. The other potential target I would use is a Fibonacci expansion like this, okay, to show first target. First target is shallower than that at 2210. Okay, that would be first target, okay? First target, I think, is a lot more likely than 2350. I don't see the expansion. I don't see the expansion to support it. And the other thing I would say also on a weekly basis, if you look at historical fifth waves, this fifth wave here, let's just take a look at this real quick. Look at my expansion target, okay, my short target. Okay, we didn't even hit it. Okay, so fifth waves are notorious for being short and sweet and, you know, on a weekly basis. This was back in 07, of course. Now, you can't really compare that to this fifth wave. Okay, this was during a period of economic expansion up to 99. We're in a different world right now, in my opinion. Okay, so I'm looking for this fifth wave on a weekly basis to not come anywhere near 55,321. And I'm basing that just looking at how this has ended, first of all. Second of all, the expansion that we're getting economically and the expansion we're getting in terms of 52-week highs, I don't see it. Third, look at the divergence here. I mean, we go much higher, we're going to break divergence. So, you know, I think we're going to have a significant turn here, which is going to be higher. So back to a daily chart, right? So could this be basically a contracting diagonal on a daily basis? Let me take out the green line here because it's kind of confusing. Could this be a contracting diagonal, which is a WXYXZ? We're done to our short target of 2210, which is our Fibonacci expansion of 1.236. Could that be it? Could be. Nobody knows what it's going to be, but if we see monthly pivot support, guys, I'm looking long, and I'm expecting higher prices because I don't believe that this is the top. That's for sure. We're clearly not done to the upside. So, Bruce, I hope that helps answer that question. You're looking the same in international equities, one last wave up, then down. Depends upon the issue. If you look at the Nikkei and if you look at the DAX, I am not convinced that they're done to the downside yet. We may see a double bottom in the DAX. We may see lower prices, and we already have a double bottom in the Nikkei, but we may still see lower prices. Okay, I'm not convinced that those issues are going to go higher like this. So during this back test here, and this is one of the reasons why I'm looking all the way back to the potentially floor ceiling, but all the way back to the monthly pivot. If we're going to see those lows in the DAX and those lows in the Nikkei, we're going to have to make some tracks here in the S&P. I'm looking for there to be some symmetry between them. Okay, so we could go short. Okay, in which case, we're going to go higher everywhere. Okay. But right now, I think we have a mixed market because, in my mind, the DAX and the Nikkei they can potentially go lower. Now, I think the the FTSE can definitely go higher. I think it's going to have a pattern similar to the one that you see here on the S&Ps. Okay, in terms of international equities. And other questions? Do you have any advice for expanded flats? How can you recognize them before? Is there a good oscillator to use? What I try to do is this, okay? Here's your 100% fib, right? So I have 100% fib in the S&Ps, and I'm looking at this to go to the upside, right? So 3 up, 3 back. I find support here. I'm immediately thinking flat. Why? Because I've penetrated. Okay, and look at the RSI. Okay, I've penetrated, but I have not penetrated any. I'm not even close to a bottom here. Okay, so when I have RSI contracting like this, it makes me suspicious of a flat. Okay, because what you typically get is you get these moves like this. Okay, which are expanding in nature, right? But RSI contracts. Okay, when RSI contracts, typically you're going to get an expansion in the opposite direction, right? So this is a pretty classic situation here where you have, your A wave, which is, pointy, no divergence, okay? 3 waves back, and you look at this last sequence, and this is something to watch for to help identify flats. It's kind of triangle-ish, okay? It's a compressed wedge, okay? Look at this last sequence here. It's kind of a compressed wedge. You get the compression. You can see the compression on RSI, right? So you see the compression in RSI. You see it go lower, or even if it came equal to with this compression, I think little falling triangle here in my mind. That's how I think. And look at the compression here. Compression begets expansion. Expansion is the 5-wave sequence. Okay, so any flat that I look at, that's what I try to look for. I try to look for the compression and the expansion. So these are flats typically that are part of corrective sequences. Okay. So does that answer your question, Sebastian? I think it does. Okay, good enough. All right, no problem. Folks, we've taken an hour. Unless there's another quick question, I think we're going to call it a day right here. Any other questions? Okay, guys, thank you for the questions. Nice webinar. I'll see you guys on the Twitter feed, those of you who are subscribers. Everybody, trade them well tomorrow. Take care. Bye-bye.